Hello, welcome to our next video. In this video, we're going to be talking about our total food cost and our total sales as a percentage, and how we control those and how we calculate those. So controlling total food cost and sales. So we want to track our actual food cost as a percentage of sales to help us spot unexpected loss. What we've talked about up until this point is sort of theoretical, what we should be making in food cost percentage or what we should be making in profit based on what we want to sell our items for. Now, if we had a food cost of 30%, for example, in order to hit that 30% at the end of the month, in a perfect world, we didn't make any mistakes, we didn't throw any food away, nothing went bad in the coolers, which is unrealistic, right? So we compare our potential food cost, which was what we had used to set our pricing, and we compare it to our actual food cost, right? So we usually calculate it on a month, my month basis. Some places will calculate it weekly, some places will calculate it quarterly. It just depends on what your accounting department wants where you're at, right? So what do we do? We track food and beverage purchases separately, right? We're going to have a food cost and we're going to have a beverage cost. And we want to be able to track those as compared to their respective sales. Food cost is going to be calculated based on food sales, and beverage cost is going to be calculated based on beverage sales, right? Inventory is important, right? How much do we have in inventory? And how much of that inventory did we use to generate our sales, right? So we need to be able to calculate our inventory value, and we're going to talk about that in the next chapter. But for here, I'm going to give you an inventory value in our calculations, right? So we also have other things to take into consideration, right? We have our inventory. What about employee meals, right? Or obviously, well, not obviously, but most places you've worked, you probably aren't paying full retail price for that hamburger that you're going to have as an employee meal. You're probably getting a $2 or a discounted price for staff meals, right? Well, those costs need to be accounted towards your food cost. And if you're not selling them at the retail sale price, that's going to affect what your food cost percentage comes out as a chef. So we need to take that into account. Any promotions or giveaways that marketing has, right? So 2-for-1 appetizers, or you know what, customers are happy, so we give them a free dessert. Things like that shouldn't impact the chef's overall food cost because it's not based on the selling price that we're actually should be generating, right? We need to manage those issues, right? But it shouldn't affect the actual calculation of the food cost. The other thing is transfers. So what are transfers? Transfers are the easiest situation is sort of you have a kitchen and you have a lounge or a bar, right? And in the bar, they use some food products, and in the kitchen, we use some bar products, right? Or some beverages. So if we transferred, say, a bottle of whiskey back to the kitchen to use in our whiskey barbecue glaze or whatever, we're going to take the cost from the bar and add it to our food cost dollars because we're using it as an ingredient now. The bar should be taking a credit back for that value so that it doesn't affect their beverage cost, right? Same thing goes if the bar is using a case of lemons, the kitchen orders it, brings it in, we're going to transfer the cost of those lemons to the bar so they can use it in their beverage cost, not in our food cost, right? So transfers can occur between restaurants and larger operations, but generally they're most often you're going to find them between the kitchen and bar for ingredients, right? So how do we control all this? Well, we also have a couple more things, right? So stewarding sales. Now, what are stewarded sales? Well, steward sales are, in some operations, they'll allow employees to buy products at cost. So order a case of, convenience product hamburgers for somebody, right? So you bring this case of burgers in and you sell it to your employee the same price it cost you to bring it in. That's 100% food cost. You didn't make any profit on it, right? So if you do a lot of that, it's going to affect your overall food cost. So we have to treat this sort of like a transfer out, right? We're going to credit our food cost sales or food cost dollars for that amount of the stewarding sales. The other thing where we can get a cost rebate to our food cost is through grease sales. Some places, in some cities, there are companies that will actually buy your used grease or your deep fryer oil and then turn it into biodiesel or things like that, right? So if you're getting $1 back for that, you're probably getting less than you actually paid for that deep fryer oil. So it's now a 200% food cost on that. So I'm going to show you in a second how we take this all into account without swinging your food cost percentage calculation as a whole, right? So the first thing we're going to do is we're going to calculate something called our preliminary cost of food sold. And what we do there is we take our opening inventory, we add what we bought, and we subtract what our closing inventory is. So what's opening inventory versus closing inventory? Our opening inventory is the value of the products we have in our restaurant at the beginning of the month. $5,000, $10,000, $50,000. Doesn't matter. It's going to be different for each restaurant. The important here is going to be the difference between how much money you had in your inventory at the beginning of the month versus the end of the month. So the end of the month is your closing inventory. If we had $50,000 in our opening inventory and $40,000 in our closing inventory, that means we used $10,000 worth of our inventory to generate our sales. So that number has to be added to our purchases to figure out what our cost of food was, right? Conversely, if we had $40,000 to start for our opening inventory and $50,000 at the end of the month, well, we've saved $10,000 or we've added to that $10,000 worth of inventory. So that needs to come out of our purchases, right? So this formula up here allows us to take that into account. Our opening inventory, plus we added in all our stuff we bought throughout the month and then subtracted what was left, gives us the amount that we actually consumed or we actually used to generate our food sales, right? So then once we've got our preliminary cost of food sold, then we're going to take into account all those transfers in, transfers out, our employee meals, our promotions, our write-off, our stewarding sales, our grease sales, right? So transfers in, that's that bottle of whiskey that we're using in our whiskey barbecue glaze we got from the bar. So we have to add that. It's like they're another supplier, right? We bought that bottle of whiskey from the bar, so it's a food cost. We have to add it to our cost. Now that case of lemons we gave to the bar, well, we didn't sell it at a profit, so we need to transfer that value out. And we need to transfer our employee meals out to a labor cost. Our promotions and write-off are going to go to a marketing cost. Our stewarding sales are going to go somewhere else along with our grease sales, right? So these minor costs don't influence our actual food cost percentage we calculate at the end of the month. Remember, at this point, we're dealing with all actual numbers, whereas before, when we were setting our selling price, those are potential. Potentially, our cost of our dish is going to cost us $2. Well, maybe the price of ground beef went up on our hamburger, so it costs us a little bit more, right? So we're going to use these numbers, our actual numbers, to calculate what our actual food cost was at the end of the month, okay? So I got an example coming up here. So the first example, a hotel restaurant has the following data. What's the cost of food sold for the restaurant? So we have food purchases, opening inventory, closing inventory, transfers in, transfers out, etc., right? So we need to figure out from this list, what are we adding in? What are we subtracting? Okay, so the first thing we want to do is calculate our preliminary cost of food sold. So what was our preliminary cost of food sold? It was our opening inventory, closing inventory, and our food purchases, right? So opening inventory plus our purchases minus our closing inventory. And that's going to give us 41,000 plus our food purchases of 73,000, subtracting our closing inventory of $44,000, which is going to give us a preliminary cost of food of $70,000. Okay, so now for the rest of these items that are listed here, we need to figure out, are those going to be added to that 70,000 or subtracted from that 70,000, right? So let's change colors here. Let's use green. So transfers in. So we took it into the kitchen, $1,200. we're going to add that in, right? Transfers out of $250, that, couple of cases of lemons went out to the bar, we're going to subtract that one, right? Employee meals, we're going to subtract that. Our promotions and write-offs, we're going to subtract that. And our stewarding sales, subtract that. And our resale, subtract that. So from our $70,000, we're going to add $1,200. And then we're going to subtract $250, subtract $2,850, subtract $460, subtract $180, and subtract $30. That gives us now a total cost of food sold of $67,430. That's our cost of food sold. Taking into account all of those credits and all of those debits, right? So these we refer to as credits because they've decreased our cost of food, right? This is a debit because it increased our cost of food, right? That $1,200, right? So once we've got that $67,430, we can apply that to our total sales for the month, right? So if we had total sales for the month of, say, $100,000, just for another zero, we can take our food cost triangle that we used before, and we can change this selling price to total sales, and we can take our $100,000, and our food cost is $67,430, and we can figure out our food cost percentage is 67.4%. Pretty high, right? We need some more food sales. But that is our actual food cost percentage for the month based on $100,000 in sales, right? Same triangle, except now our selling price becomes total sales. Okay, so total sales equals the total money charged to our customers for the food they purchased. Beverages are tracked separately because we're going to calculate a beverage cost based on our beverage sales, right? Our standard food cost percentage is the amount that we budgeted to use to determine our net menu prices. So in our previous slides, when we determined our selling price, we were using our standard food cost percentage, or I called it a potential food cost, right? A couple of different terms that are used interchangeably, right? In our text, we call it standard food cost. Anything budgeted is considered standard. And then we have our actual food cost percentage, which is what we just calculated here, right? These are never going to be the same, right? If they're the same, it's a fluke. These are all based on potential or our standard and then our actual, right? And remember, our standard food cost was based on a perfect world. We didn't throw anything out. Nothing went bad in our cooler. Prices didn't change, right? So standard food cost is our target, right? Actual food cost is going to be slightly different. Now they're going to be close, or they should be close. If they're not close, then we need to be doing some investigating to find out why, right? And we'll talk a little bit about that in the next video when we talk about variances between our standard food cost and our actual food cost. One last slide just to show you that triangle that I drew on the screen. So our sales have now changed from our selling price is now our total sales, right? And this is for calculating our total food cost dollars, not just one dish, it's all of the dishes that we sold. And then we calculated that food cost dollar by taking our opening inventory, adding our purchases, subtracting our closing inventory, and then taking into factor all our transfers in, out, grease sales, etc. Right? Okay, the next video we're going to talk about the variances between standard and actual food cost.